All right, this is closing trades on ET now. Let's just bring up the Nifty for you. You're looking at 57.35 on the index. The intraday graph will just come up on your screens. Down about 1%. The key culprits in today's market session are really the financial names and also IT ahead of earnings. The market breadth reflects the broader momentum. HDFC is pretty much at the bottom of the heap after Carlyle sold off its stake, 5% down on that one. IDFC is the other key loser. You also have Punjab National Bank, HDFC Bank gave way in the session. We have seen a fair amount of selling pressure come in on pharmaceuticals as well as IT. Infosys ahead of earnings down about 2%. That's the case with Wipro as well. HCL Tech is looking lower. In fact, on the Nifty, we are looking at only a Hindustan Unilever, an M&M and a Tata Motors being steady with a 1% gain.
Yeah, the scene is probably not too different for the broader markets either. There's a bit of red today in the screen. Call it profit booking, call it otherwise. I mean, IVRCL is a separate case altogether. All that talk about some corporate buying activity happening actually was actually in the other thing that happened, when there was some selling that happened. And IVRCL is down 6.5%. Hathway is down 5% in today's session. Aurobindo Pharma on news is down. The entire infrastructure basket is seeing some bit of profit booking in trade, as is insurance. So buy the rumor, sell the news. That's the case in insurance. That's the case in stocks like financial technologies as well, which has come off in today's trade. Not as much as some of the insurance companies, but yes, the Bajaj Finserv, for example, is down quite a bit. But FT is the other one which is looking a bit weak. What has looked very strong, and after a long time, some weaker hands are doing well on a day when the market is not. Blue Star, 10% higher. Some fund buying happening for sure because the volumes have really jumped up on the cash basis and the delivery volumes are high for Blue Star. So that's doing okay. EduComp and a couple of other education stocks haven't done too badly either. And aviation continues to rise. So Jet Airways is up close to 1.5%, while SpiceJet may be a bit soft. So select pockets which have done well in trade. Of course, the bigger news probably for the day from a news perspective remains the trading glitch that happened. But for now, we're doing okay. I think maybe that spoiled a little bit of a sentiment as well. At least that's what the dealers said. But what do we do next? Does this pause give an opportunity to buy into, or do we slide a little bit further in this consolidation, so to say? Let's get an Ashwini and Mitesh to speak about that. Gentlemen, afternoon. Thanks so much for joining in. Ashwini, 45 points off. No alarm bells for sure. The question really is, can this consolidation or that bit of a pause that we're seeing extend for a little longer? Essentially, can the Nifty go down to sub 5,700, around 5,600, and then resume a trend upwards, or you don't foresee that happening?
You're asking me tomorrow whether the temperature will be 45 or 40.
You're good at that, Ashwini.
Well, I think the more important point is that, you should be long at 5,700, at 5,600, even at 5,500. So use the level of depth that you are comfortable with. And the idea is that finally the longer term trend is on the upside and the market will bail you out. Okay, now 5,600, 5,630, which was the Feb high, chances are that is an extremely good support. If a lot of things go wrong and we have to correct, those are levels that shouldn't be broken in a hurry. But obviously, the market is free to correct 2 to 5 days in any kind of a correction stroke consolidation. What's happened today is that yesterday we broke out of a narrow range, and today that breakout has failed and we've come back into the narrow range that we were in before yesterday. So this just means that we need a longer consolidation, maybe another 7, 8, 10 sessions where we keep moving sideways. The good thing that happened was that the flash crash, took out all the weaker hands, and chances are that anybody who didn't enter earlier will get the opportunity to enter now. I think within this, 5,600, 5,750, you should do all your buying and then just hang around and wait for the market to, move higher. Because timing it in a bull market is a bit useless, because you often end up missing the entire rally. As far as individuals are concerned, I think Bombay Dyeing is a buy with a stop about 515, target of about 545. Sorry, I'm giving you the wrong calls. Thermax is a buy with a stop about 568, target of 592. Opto Circuit is a buy with a stop about 136, target of 150. And Dabur is showing traction after many days. So this is a buy with a stop about 128, target of 140.
Okay, brings out the view at least that keep it on if you're long. Mitesh, a similar question to you. I mean, my question really stems from the fact that there are a lot of people who are probably standing long right now and don't really know whether they can continue with the long positions if indeed the index is slated to go down. So the main question is, yes, we might actually come up after a little bit of a correction, but do you think that the pause today could extend a bit longer? Essentially, could this 5700 level be broken and maybe we slip another 100 points? Sure enough, we may rally after that, but what immediately?
Neeraj, I think that's the question which I'm trying to figure out. What has happened is that we've been going in an upward direction for the last few days, and I think today's fall, while it may be a freak trade or whatever it is, it's a traded fall. It's kind of snapped the buy system or the trend following system which we kind of used to follow on the intraday hourly chart. So my sense is that maybe there could be a pause. Now it's difficult to comment as to how lower we might go. The level which I'm looking on the intraday charts again is 15690 and then possibly 5640, and I think for a position trade, I think what Ashwini said makes a lot of sense, that you should be long at the current levels or even 100 points below from current levels. But for somebody who's sitting with a short-term horizon, maybe it's time to take a pause. And today, despite the fact that we have had a freak trade, I think overall the sense is that the markets are close to 1% down, and I think some of the trend falling systems have come out of their buy mode. There is a chance that we might actually consolidate a bit more before moving up, and the first level to watch out on the downside would be around 5710 to about 5695. If that is being taken out, I think 5640, 50, and then possibly below that also, you might look at 70-80 point kind of a decline. So it may not be much in the overall sense or compared to the rally which we have had, but I think this could be the first signal of some kind of correction, starting over there. What we have also observed is that, while FMCG, stocks like Dabur, ITC and Lever have done very well, the other defensive part, which is the pharma part, I think that's started to look a bit shaky, and I think, we have had some kind of distribution patterns. Today in the morning, I had sell calls on Lupin as well as Glenmark Pharma, which have worked very well in this market. So maybe, there could be some kind of more churning happening as the markets go into a mild consolidation. I will not say a big correction as of now. I don't think that's that possibility is something even which I am considering, but yes, a mild consolidation with a slight downward bias with partial profit booking kind of thing. I think that's the kind of scenario which I understand from the markets. Coming from trading calls, I've got a buy on Crompton Greaves. That's a stock which has been buzzing for last few days. Today it's managed to get past levels of 133, 134, and which were the earlier highs as well as the 200-day average. Can be bought with a stop below 133.5 for a target of 145 on the upside, and I've got a sell on Asian Paints around the 3800, 3815 mark with a stop of about 3880, and I would look for a target of 3630 on the downside.
Even though you have recommended Thermax, Ashwini, Mitesh has given in a call on Crompton Greaves. What about the larger players, L&T and BHEL? There's much interest there. I mean, BHEL was one of the top gainers in yesterday's session. Technically, how are they looking?
Well, again, on decline since BHEL has been recommended earlier, and now some of the smaller stocks are beginning to move. And that is the reason, Thermax was suggested, but BHEL clearly around, 240, 245. If in this decline you can get it, Larsen around 1500. These stocks have just started moving. I mean, while from the lows it may seem like a huge move, but in case, BHEL has bottomed out, then probably there is, 150% on the upside. Similarly, Larsen, 1500 is a fairly, decent level to get in, because the upside, if and when this sector picks up, is easily $1,000 on the upside. So all of these stocks, given the kind of terrible time the sector has gone through, are coming out of massive bear markets, and probably have much more upside than people think. You shouldn't be playing for those 10 and 15 bucks right now, because this is truly a beginning of a bull market.
Let's just get in a fundamental voice in the markets. Sethuram Iyer, who's the CEO of Daiwa Asset Management, joins us in the studio. Mr. Iyer, thanks very much for taking out the time. What's your broad view on the market at this point?
Markets have had a huge run-up over the last few weeks, and these have been largely fueled by the sentiments. We have seen a whole spate of reform measures being announced, and these have definitely had their mark on the market. My only feeling is that we are at the beginning of an earnings season right now, and at this point of time, I don't see the earnings for the last quarter being very supportive in terms of the market movements. I believe that we are going to have a flattish quarter in terms of earnings, probably even to the extent of being slightly negative in terms of the overall earnings potential, because we've been seeing numbers, macro numbers, automobile numbers, other numbers which come in, which have not been very great in terms of what we have seen in the last few months. So overall, my guess is that the earnings season is not so great, but market is driven by sentiments, and the sentiments are good, and I believe that the markets can sustain these levels.
What are you doing? And there's a bit of a pause today. It may extend for a couple of days longer as well, Mr. Iyer. Assuming that that gives you an opportunity to buy, and assuming that you have some gunpowder left, where would you park the money?
It's going to be a difficult call. This is a market where, when you had a run-up of around 20%, it's ideally the time to take a pause and then catch up wherever you see dips happening. I believe this is a market where I would definitely invest significantly in dips, because I don't see the markets turning negative or into a completely negative mode anytime. I believe we are in for a continued bull run with pauses.
But having said that, I know it's a difficult decision, Mr. Iyer, but I mean, you have to make that decision. What is it that you like in the market right now?
One has to be very selective in terms of like I've been maintaining in my past few talks in this channel. I believe this is a bottom-up market. One needs to selectively look at stocks. This is probably a time where one has to continue to look at infrastructure stocks. They have run up quite a bit in the recent past, but given the fact that this is one sector which has been completely in the doldrums, and that this sector could take off in a very significant way, I believe there is still a lot of juice left in some of the stocks.
And when you're saying that there is opportunity in the market, would you play momentum? Would you buy momentum stocks, infrastructure, real estate, for that matter, even some cap goods?
One has to be very, very choosy and selective in this market. I won't go by a sectoral preference. One has to go pick stock by stock.
But structurally, things could be changing, right? There's talk about how things may be looking up for real estate after the badging that these stocks have got.
Yes. Yes.
Likewise for cap goods as well.
Yeah, but ultimately, what the market is going to support and sustain is what current numbers are going to come out of those sectors. And whatever measures we have seen which will boost up the sectoral, what you call the sectoral financials, but then like it's going to take a while. It's not going to happen overnight.
So where is your conviction right now in the market?
I think one has to spread it out. It's going to be a distributed market. One has to be choosy on sectors. There will be sectors which may not show up great numbers. I can think of, let's say, IT, where the rupee appreciation which itself could be a little bit of a dampener, given that the other factors in that sector have not been great. But generally, I think a whole lot of sectors one needs to look at and selective.
Let me ask you about a couple of sectors. One is, what would you do, say, for example, with mid-cap cement? There's an argument that has been going around that large caps have done well, and now there's a time for a valuation catch-up to happen in mid-cap cement, and lots of stocks being discussed as well. Do you buy that argument?
Yeah, I mean, I believe that the minute we see a significant up move in terms of the construction and the infrastructure activity going up, that's where across the industry, what you call the capacity utilizations are going to be significantly higher. That's where I believe the mid-cap...
So you think that could happen over the next 12 months? Would you play mid-cap cement
over the next... In fact, it may not even take 12 months. I believe it should happen between the 6 to 12 month period.
Okay, great. So that is one sector taken out of the way. The other one that wanted to check with you about is, what do you do with auto? And I'm differentiating into one, four-wheelers, and two, strictly the two-wheelers, because the last couple of months, the sales volumes haven't been impressive. Companies have sounded warnings as well. What do you do with the large two-wheeler companies? Do you hold on to them, or would you even make fresh investments into them?
See, two-wheelers is something like, of course, it would be stock by stock, of course, which unfortunately I'm not in a position to talk about. But overall, I believe that this is not a time one would be completely bullish on a two-wheeler segment. At the same time, one needs to recognize that we are heading into the festival season.
Sure.
And numbers which get thrown up over the next 2 months are going to be significantly different. And they could completely change. And given the overall mood in the economy and the, in the system, I believe the numbers could be significantly great.
Okay, Mr. Iyer, just hold on to that thought. Just get me a few stocks which are moving around and just a view from our technical experts on a couple of them as well. Hitesh, come to you. One with a blue star, up 10% today on very heavy volumes, was up 5% yesterday as well. And, well, stocks like Thermax, for example, too, have done well. What about Blue Star from the same space, so to say?
It looks very good, you know. In fact, it's made what we call as a triple bottom formation around the 160 mark. The breakout was at about 204. And I think today is the day, you know, yesterday closing was around 200. Today is the day the stock has given a breakout, and that's why we are seeing a very huge price and volume action. My overall sense is that this stock has entered a medium-term uptrend, and you know, I think it could head towards targets of 280, 290 over the next few weeks, and I think can be bought at current levels as well as on declines and pullbacks to levels of 210 to about 205. That's the best buying range, but I'm not sure whether you will get that. So start buying now, and you know, in case of 4-5% kind of dip, add more to your positions. I suspect, as I mentioned earlier, 280 to 290 should be tested in the next few weeks.
Great. And Ashwini, one couple from you as well. 2 weak stocks, and what would you do with them? One, an IVRCL, weak as in weak in today's session. One, an IVRCL, and two, a Hathway Cable.
You know, basically I dislike companies which are over leveraged and, you know, mid cap, you know, infra type of stocks. So, and it's any case weak because a lot of time it was running because of news of takeover, etc. So IVRCL is an avoid, not a short, because it's still seems to be like a bull market. Hathway Cable is a much better stock to buy, and in fact, the moment it broke out of 110, I think we've continuously recommended it, and stop is fairly close by, you know, 215, 220, and I think it should make further new highs and move towards levels of 300. So this is one of the mid caps that you can, you know, continue to ride, and it'll probably have a good bull market. Its all-time high was about 225, so it's recently crossed that. So chances are that it'll make several new highs before it's done.
Mr. Iyer, come to you on where would you see a contrarian opportunity in the market? You know, broadly, it can be either across sectors or large caps and mid caps.
Yeah, I think, of course, mid caps is certainly worth a look at this point of time. The one factor which I thought I should highlight at this point is that there could be a significant shift in terms of margins which companies earn, because what has happened is we've had a fairly weak quarter in terms of commodities. And since these would be inputs for a lot of companies, there could be significant margin improvement which come in the quarterly numbers. Now, that's something which one needs to be very carefully watching for, and that's where all the contrarian opportunities would come up.
For this quarter itself, you think?
Yes,
that could
for this quarter, because the whole of the last quarter, commodities have not gone anywhere.
So machinery manufacturers, auto manufacturers would fall.
Yes, all
in
of
that
them
category?
could experience margin improvements in varying levels. Now, one needs to do very detailed analysis as which could have a better impact. Of course, the deed would be done once the results are out and the market would have already reacted. But this is something where one could probably hope to look at and unearth something which could come out with a surprise number for this quarter.
What about reform-oriented sectors, FDI in retail, in aviation, insurance?
I really would not look at much more significant gains coming from whatever run-ups have been there have already been factored in. I don't believe there's anything, because these are not
But what are
something
your
which-
broad weightages to these sectors? Have you been building positions here?
Not really. We've been fairly,
Underweight.
underweight on most of these. We do have some exposure to the aviation sector, but that's more on some of the aviation stocks which are fundamentally strong.
It's a handful of them, 3 of them. I'm guessing you're probably pointing towards one.
That's a good
we typically fly 2 airlines. One is listed, one isn't. But anyways, good having you, Mr. Iyer. Thanks so much for taking the time out and joining us, and look forward to having you more often on the forum. Thanks for taking the time out. That's Daiwa Asset Management. Well, one key theme, maybe margin expansion could be a factor this quarter around. We'll talk about that theme post 3, but it's 2:55, so get in some mid-short trading ideas. Anything, Ashwini, that you scanned in the last few minutes?
It seems something is going on with SR Oil, maybe some court judgment, etc. That's beginning to move higher, so that's a buy with a stop of about 53, 54, and look for targets of about 65.
Mitesh, what about you?
Opto Circuit was a call in the morning as well. So the BTSC also it can be taken. I would suggest keeping a stop roughly around levels of 136.5 and hold on. I think 144, 145 could be tested this tomorrow.
Ashwini, just before we take that break, I know you spoke about Bombay dying, but I think you'd given that call earlier as well. It's up close to 7% now. If I'm not wrong, you gave this as a BTSC yesterday too. What does one do if he was long on Bombay dying?
Bombay dying is breaking out of a consolidation, and that breakout is getting confirmed today. So probably hold on to Bombay dying in this kind of a market, for a stock like this, running up to 600 shouldn't be, extraordinary. So just keep a trailing stop around 515, 520, and I think it could do better things.
Sandeep Wagle joins in with his specific recommendations. Sandeep, what would you recommend in the last half an hour of the session?
Tanvira, buy in Venky's India, stop loss of 580, target 660. This is a little longer term, by a few weeks possibly. A buy in Adani Enterprises, stop loss 218, target 260. And a buy in Crompton Greaves, stop loss 130, target 150.
So let's leave aside Venky's. Between Crompton, something that you gave yesterday, and Adani Enterprises that you're giving today, which is the stronger one, Sandeep?
Both look equally good, Neeraj, but I would go with the Crompton probably because we have already spotted it earlier and it is showing a little more momentum.
Bring up, we've spoken about these stocks, SR Oil and Reliance Industries. Sandeep, thanks very much for joining us. I just want to highlight SR Oil and Reliance Industries, the intraday graph. That's 11% move, 58.25 coming in there. Reliance Industries is the other one that should come up on your screens. About 0.5%, but I think the volume pickup on this has been fairly significant. That's 860 knocking on that for Big Boy.